Worked on it?
Yes, sir.
I'd
I've gone
gone
through
through
it.
the
Yeah.
I'd gone through the usually course earlier before our course started, but this week I couldn't go through.
Okay. But if you have seen it, then it's fine. It's the same course, it's not different. Okay. And Venki?
Yes, sir. I've gone through it.
Okay. So today, I just plan to share the similar things, but probably I would ask you to share your feedback and how you guys are recording, and then we would be discussing how we implement this usually into the practice, because this is some which is one of the bigger part of your curriculum. So let me also share my screen. Okay, so you can see that. Okay, yeah. So basically, this usually course is uh, was divided into multiple parts. So this week we are going to discuss only about the rooms division, and then next week I will enroll you into this tomorrow or day after tomorrow. I will enroll you into the F&B course as well, and the other operating departments. And then next week we will be discussing about the food and beverage, and after that week we will be discussing about the rest part of usually the undistributed part. So that course is I have not yet prepared or does not yet uploaded on our website. It will be coming soon, so you will get that access as soon as well. So if you have seen the usually, basically the usually has a few things as a standard format, as a defined revenue segmentation. So today we will be talking about mostly about the revenue, and tomorrow we will be mostly discussing about the expenses part. So since revenue is divided into segmentation, so in as you would imagine, to understand the hotel's revenue in deeper details and to create the strategies for marketing and sales, we need to divide the hotels need to divide their revenues by looking at the individual segmentation where they are making the most of the money, where the revenue is coming from. So it is divided into two main segments. One is transient. It means the non-group expense, non-group revenue, which essentially is less than 10 rooms traveling at the same time. And then there is a group rooms revenue, which is more than 10 rooms at a single time, right? Then you have contract room revenue, which is and these both are transient room revenue, means they are staying for one night or two nights or even 14 nights, but they are coming and going. They don't really have a fixed contract to stay in the hotel. But if the guest has a contract for over a month, in the at the time of checking in, and then there are terms and conditions signed at that point of time, then that revenue, even it comes from retail or negotiate or wholesale, via it can come from anywhere, but it will go into the contract room revenue. So the contract room revenue and transient room revenue is distinguished because both are different type of businesses. And then you have others room revenue, which is mostly the early check-in, check-out, and then minus the allowances. So that's the room revenue. So do you guys understand why these revenue segmentations are segmented like this? Why we are covering transient separately and then the contract and other room revenue, and how this transient room revenue is divided into groups and individuals and also that each segment is divided into retail, discount. So I hope you have, if you have gone through the course, you might understand already that what is retail and what is discounted. So have what is your understanding why this segmentation is divided in this way? Anybody?
It's to track and control the performance individually
Off.
of each segment. So you can only control something if you can measure it. So once we start measuring it, we can control it and then we can grow it.
Yeah, no, but that's fine. But so segmentation, but how then how these segmentations are defined? Why not? Why don't we have any other segment? Why we have divided into retail, discount, negotiate, qualified, and wholesale? Why not other type?
Uh, because if we cut it any other way, then what we will have is a overlap with the source and the segment. Then it will start overlapping with the sources.
So is coming from the source of bookings, right? Source of the business. So this
Correct.
segmentation is done by source, right? How the business
Uh,
is being generated.
yes, but sometimes there is a overlap in source also. Like in
Hmm.
my case, there is always a overlap between source and segmentation, because the company, the way it is used to doing the marketing segmentation,
Hmm.
and the board, they are familiar with a particular format. But then I am not very satisfied with that format. That format doesn't do justice to certain
Hmm.
sources, because
Hmm.
along with the market segment, it has a few sources also, which are counted as market segment. So what happens is, suppose, like for example, let's say, COVID-19 segment,
Hmm.
the separate segment for that. So now when we put business into that, production into that, it steals the production from the website third party industry. So third party industry segment is something that the board is familiar with in the marketing statistics report,
Hmm.
and that's the same way we do it throughout. So
Hmm.
when we put production in COVID-19 segment, it will pull the production from third party industry, which will deflate it.
Yes, that's right. So in to accommodate that, usually we have another part which is we call it sub segments. So, for example, your COVID-19 business is, let's say, is coming via the government, or because it's a negotiated government, it's mandated by government, right? So you can put it under negotiated. Or let's say if it's coming from the, it's an individual one and is coming because of coming via your websites, then you can put it under your retail business. So it can be a sub segment within the major segments. Usually the hotels, because as you rightly said, the marketing has different type of segmentation, and the way marketing understands their segmentation or how they are structured is sometimes different from usually, right? So in that case we normally have something called sub segment. So for example, retail. So as you know, the retail means that, if you look at the definition of retail, it's a market position rate, seasonally priced room rate from the transient business, is a non-discounted, non-qualified, and is always available when the room has, or when the hotel has a room to sell. Now you can sell this rate on your OTA like booking.com. If you are selling on a booking.com, it is your same rate, and non-qualified, non-discounted, and is always available when you have a room to sell. You may be selling it on your website. You may be selling it when the guest is making a check-in at the time of walk-in, right? So you have three different ways of selling this retail rate. So, in sometime, in order to get more insights, the hotel would have created another sub-segment, which is called retail. Then it is divided into three parts. One is walk-in, means the hotel, which is the guests which are coming and using this rate. Then you have your own website, which is selling the non-discounted rates. Then you have your OTAs. Now, on OTAs, you sometimes sell packages, you sometimes sell discounted rates, you sometimes sell local promotion rates, you sometimes sell discounted packages. So, in that case, if you then in that case, ideally, it would go into the different segments. For example, on your website, You have a bar rate, which is a public rate. It's at you come and anytime you can book it. You have a discounted rate for, let's say, for the month of June, or for the month of if we are in the month June, so we may run local promotion rate, which is starting till the end of June. Now that rate by definition should go into discount, right? But from sales and marketing point of view, because the website is maintained by one department, is going to be managed by reservations or by the revenue management or by the distribution, or there may be an e-commerce team. For them, production has to go into their website, right? But if you put everything into website, then you are not following the usually, because if you put every production into usually, it will not go into retail, not go into discount, not go into the qualified, because they may book directly via the website. Nowadays, because of the e-commerce, we even put the negotiated rate on our website. So we give them a coupon code and say, okay, if you are a corporate agent, if you are a corporate company, you have your specific corporate, you select a coupon code which will give you your qualified rate. The only thing is, at the time of check-in, you have to prove that you are entitled for that rate. Yeah. So in that case, if you put everything into website, you would be losing your usually, because it will not be following the usually. So what normally hotels nowadays do is they create sub segments, or they create another way called source of booking. So there is a market segment which has to follow the usually, because that's the standard, and then there is a market source of booking, right? That source of booking can be website. Then the market segmentation can be retail, can be discount, can be negotiated, can be qualified. So there are two different things. One is the market segmentation for accounting and reporting purposes, and then there is another one for source of booking, which is coming via the website. So this way, that source of booking can help the marketing to understand what marketing channels or what source of bookings um, are effective and what are not effective. So there can be a travel agent who can be booking who may be booking a retail rate, or who can be booking a wholesale rate, right? Because let's say a travel agent does not have a wholesale contract. He is forced to sell the retail rate or a discounted rate at a commission of maybe whatever x percentage, and he agrees with that. So where the booking of that will go, into retail or into wholesale? Any idea? Let's say there is a travel agent who is selling the room at a retail rate, which is non-discounted rate, and he's getting a commission, right? So where the revenue should go, wholesale or retail?
Retail, it should go under.
Retail, right? But you can select the source of booking as wholesaler or a agent, correct? So in that way, you get
Mhm.
both reports. So for accounting purposes, for reporting purposes, you will look at. So there are two ways. The retail, because of the way these prices are structured, the segmentation is defined by to understand how the revenue is being segregated from the paying capacity of the customer, not by the booking source of the customer, right? So retailers who are paying a non-discounted rate are the highest payers, right? Because that's the highest rate you can achieve, retail rate. Then you have a discounted rate, which is the next category, where you may be giving a 10% discount or a 15% discount, or you may be selling packages, promotions via online, via OTA. OTA, opaque, means when the OTA, for example, Agoda or Expedia, are combining the room into the other packages. So it's normally they are paying you at a discounted rate. They are not going to pay you your normal retail rate, right? So it will go into the discount. It's the second highest category usually. Then you have negotiated rate. Negotiated rate are supposed to be lower than that discount rate, because you are selling a bulk or to a corporate company who is committing to a certain business which is repeated every month or every 6 months, and but they have to be identification to get the rate. So in this negotiated, the company may pay directly for the customer, or the customer may need to pay by themselves, i.e. On their own account. But the important thing is that the rate is negotiated by the company for the with the hotel. That's why it's going to negotiated. And then there are qualified rate, which is maybe similar to negotiate or maybe even lower than negotiate, but these are not negotiated with anybody. Hotel is giving it itself, or it's sometimes mandated by the government that you may have to give a certain rate. For example, in Philippines, there is a senior citizen discount, right? Whoever is above 65, whatever is your rate, senior citizens are supposed to get 50% discount, whatever is your rate, it doesn't matter. So that becomes a qualified rate. Then certain countries may have a specific preference for, let's say, armies or for government or for employee rates. Sometimes the hotel is giving its own employee rates. So these rates are qualified, means they you have to qualify to a certain criteria to be able to availing that rate. And it's not a negotiation between the company and the customer, it's the policy of the hotel or from the government, right? Then there is a wholesale rate, which is
Understood. Yes.
discounts. Yes. Sorry, you were saying something. Hello, hello. Am I audible? Can you hear me, guys?
Sir,
Yes. Yes, sir. You're audible.
can you?
Okay. Okay. I thought somebody was trying to say something. Okay, no problem. So the wholesale is with a discount between contract between the travel agent or another company who is selling on your behalf, but they are making a margin. So if they are selling your retail rate, then the revenue will go into retail, but the production will go into as a agent, because the agent team might want to claim it as their own production, right? So there are two different things. One is the revenue segmentation, and one is the production report. So both are two different things, and their purpose is entirely different. So usually the property management systems are able to capture these two different things. They are able to capture the revenue segmentation, and they are also able to capture the source of booking. So you have to be very careful in designing the source of booking, so that you are collecting the source of booking as the business is coming really. And the revenue segmentation is based on the ability of based on the this criteria, where the it's a discounted rate or it's a negotiated rate, or it's a retail rate, or it's a qualified rate, so that the different type of revenue segmentation is captured. So that is the retail. And then you have group rates, which is divided into the again the source of booking via corporate agents, via association, via government, via tours, wholesalers, or via the other social, military, education, religious, and fraternal. So, are you all following this groups room revenue definition of 10 room nights, 10 or more rooms,
Yes, sir. We are following this.
or
No, sir.
anybody is
No,
following
not
less?
at my place.
Yeah. So, what are you following? Is it
In
different?
our place, we mostly follow B2B and B2C. Like we segregate the revenue in terms of B2B, like
Mm-hmm.
business to agents, or business to business, and business to cash, all
Oh,
the direct bookings that comes
uh-huh.
to our property.
Mm-hmm.
So we don't really have like group rooms revenue or like transient or like
Oh, okay.
retail. We have like a
Mm-hmm.
rack rate for the B2C clients, and we have like a commission rate, 15% of the rack, 20%
Mm-hmm.
of the rack, or
Mm-hmm.
10% of the rack for certain agents,
Mm-hmm.
which we classify as B2B.
Okay. Yeah, in that case, you are probably not complying with the usually. That's how it is. But in
Okay.
many hotels, those who comply with usually, the group room revenue is, even though is by usually is defined as 10. on a peak night, on any night, if and on any night a group is more than 10 or 10, it's classified as a group. If it's on any night, let's say the group is gonna stay for 5 nights, and none of the days is 10 room
Mhm.
nights. 10 rooms on any day is mostly 8 and 9. Even though it's a large business, it will still qualify as the transient business, and it will go into the relevant segmentation of either a wholesale or negotiated, however, depending on where the how the contract is done. But certain hotels which are smaller in size and which sees that most of their business is coming into these 8 room nights or 7 room nights or 10 room nights, 10 rooms on any days, they define a lower limit. So many hotels have 5 rooms per night to be sold, to be classified as group, or sometimes they have 8. So in my hotels, for example, my average inventory is 60 rooms per hotel. So we define 8 rooms as a cutoff to classify this is going to be a group room revenue or is going to be a transient. So if less than 8 means 7, it will be transient. If more than 7, 8 or more, it will be the group room revenue. So it depends on the hotel, but the only thing is it has to be consistent, right? And it includes sometimes the contract which is sometimes a free room which you are giving as a contract. For example, you are giving 10 9 plus 1, right? So if there are 10 rooms, then including the that free room night as free room as the which is given as a part of contract, then that will also that will also um, qualify to be counted as the part of rooms, and it will be counted as a group room revenue. So even these group room revenues sometimes have sub-segmentations. For example, corporate and association, they may have a sub-segmentation of having a group which is staying only, or having a group which has a meetings also. Then why are we doing this? The reason why we normally do the sub segmentation is to understand business in even more details, because usually here you will see is as a broad definition, right? The government is a broad definition. It means it doesn't have it, even though, because it's combining everything. It's combining the embassies, it's combining the government agencies, it's combining the security and NGOs, everything, right? But from sales and marketing perspective, they may want to know in deeper details where their efforts are being paid more, right? So they may want to know separately what is my NGO business, what is my government business, what is my embassy's business, what is my foreign government business, because there are usually the foreign governments or delegations who are coming into the hotel and staying. Then the tour and wholesalers have either a series, or they have ad hoc groups, or they have wedding groups, or they have another type of groups where they are coming together and doing it. So these all these major segments will have a sub segment for the purpose of tracking the revenue in even more details, because sometimes the ADR and the way it's negotiated is different, and it depends also whether they are using the other facilities in the hotel or not, right? But again, the production of these rooms will be different, because they will be tracked for marketing purposes, right? How the marketing is structured. So if there is a separate department for let's say government, so you can track it as a government. If there is a if there is no separate department and it's handled by corporate, then you can just combine it together. So this is how you can track it. So any question on group room revenue or transient room revenue?
All clear, sir.
Yeah. So
All clear, sir.
usually
All clear.
is tracked by the property management system. Maybe you are using what are the systems that you are using? Opera or another system?
Opera.
Opera.
Yes.
Everybody is using
Opera.
Opera.
Opera, sir.
Okay. Okay.
Opera and Sun Accounting.
Sun Accounting. Okay. Yeah. So then how the room nights are. So Opera, you usually have the these reports which are going to give you the subsegmentation and segmentation in terms of revenue and in terms of room nights as well, and in terms of ADR, right? Then the other important aspect that you might notice in usually is that there are contract room revenue, which we have already discussed. Is that the other room revenue? So there were certain changes in the 11th edition where they changed the definition of the room revenue. So can is everybody following the same definition for other room revenue, i.e., the no shows, which is coming from the transient or the group revenue, and is going into the this other room revenue? So it's a no show and a cancellation. So two are different things, right? So the no shows, every kind of no show is going into the other room revenue, while the cancellation is going into the other income, attrition and cancellation fee in the miscellaneous income. So not a part of the room revenue, but it's a part of the other operating departments, which is in the miscellaneous income, right? Is it the as everybody is the definition same for everybody, or everybody's accounting treatment is same way?
Yes, sir. More or less the same.
More or less. Okay.
Yes.
No, no, not the same.
Not the same. So what is the difference?
For no show revenue, day use revenue, everything is going in room revenue.
No show revenue, yes. For every no show, the room revenue is going into the room revenue, and there is no room night calculated. Means that it will affect your ADR. So when you are calculating your ADR, you are
Correct.
going to add the other room revenue as a part of your ADR calculations.
So it's like
Correct. Correct.
inflated.
Huh?
So ADR will be inflated. ADR
Overall
will be
ADR,
inflated in
overall
that
ADR
case.
will be inflated. Yes,
Absolutely.
overall ADR will be inflated.
Yes.
But
Yes.
when you are normally, when we look at the ADR, we never look at the overall ADR for any kind of analysis because it's a combination of your different subsegments, right? So we normally look at the ADR from the market segmentation point of view, and market segmentation are not affected by no shows because it's is accounted as other room revenue. Now, because this is the change in the definition, so the some of the property management systems are not really change to this definition. So there, in that case, usually the in like in my past when we used to do before the change, we used to calculate the no shows into or day use or extra bad into the subsegment. So we add the revenue into the segmentation of that particular where the business is coming from. So we would add into the segmentation so that it's included in the room, included in the ADR. But now we changed to calculate it as other room revenue, and the segmentation remains as it is. So the segment ADRs are more or less similar to what the selling prices are, right? But there are other effects. So sometimes if you have a big no show, definitely your ADR will be affected, right? But cancellations are where the things make different. Sometimes you charge for like 50% charge for cancellation or 100% charge for cancellation if it's very late. So we are able to charge, especially for groups where it can be very big. So those cancellations are usually charged to the other income, not to the group member. Now, I want to understand why you think is it, why is it like this? Why the at least why the no show is charged into rooms and why the cancellation are charged to other income? Why do you think is it? Any idea?
I think no show was is a confirmed booking. So I think the revenue should go into the rooms.
Mm-hmm. And cancellation?
And cancellation booking, any booking that is cancelled, it's tentative booking,
Mm-hmm.
which is not confirmed yet. They might have a 24-hour cancellation. They might have a cancellation like 50% of the charges are applicable if the cancellation is
Mm-hmm.
done 48 hours prior to arrival or 72 hours prior to arrival. So it's not actually room revenue because the booking is not yet confirmed.
Mm. Okay.
I'd suspect it's because it's a fee, because cancellation is a fee by nature, and
Mhm.
no-show revenue is actually room revenue.
Okay. Yeah, you both are near the answer. Well, in my understanding, the reason why is it is because when you have a no show, let's say you have a booking, you have already prepared yourself, right? You have allocated your manning, you have prepared for your amenities, you have prepared your expenses in according to the bookings, right? So let's say there is a no-show means at that until the time of check-in on end of the day, you have no idea that the person will come or not. So you will keep that room, you will clean that room, you will keep set up the amenities. You have welcome amenities, you have arrival amenities, you have your housekeeping schedules. So you have done everything, right? So you have basically incurred your expense in that prospect. So that's why the it is your department revenue because you have incurred the cost. While the cancellations are usually given a time, so there is usually a 24 hours time or 100 or a 7 day notice or a 3 days notice or whatever, right? But since the room has been cancelled, it is assumed that you will cancel out the expenses also. You will adjust your roster, you will adjust your amenities, you have time to save the money, you have time to save your expenses. So rooms division, because it's a fee, and as Seth said correctly, it's a fee. It's not a revenue, it's not a ADR, it's not something which the guest has consumed. So that's why the room revenue is going into miscellaneous, not as a part of the room division. And also the cost is not incurred in the room division because it's cancelled already and the hotel knows about it, right? So that's the reason. Now the another thing is day use. We usually have day use. So the revenue is going there. Revenue. So you will be accounted for. You will be getting your ADR, but no room nights into this case. Then similar case for early departure, late checkout, or rental of rollaway beds and cribs, and surcharge and service charges. Now the service charges. How many of you are recording the service charge as income, and are you recording your service charges as payable or as a part of your income? What is the treatment?
As a part of payable, sir, current liabilities,
As a
we are
part
not
of your,
recording as income.
you are not recording as income.
Yes.
So
No,
the
no, no.
that part, that service charge, who decide the service charge? Is it decided by hotel or decided by the guest?
It's decided by the hotel, sir. Certain percentage
And
is applied on the rooms
and the
and
guest
on
has a
other F&B and
flexibility
other.
to pay. Does the guest has a choice to pay or not to pay?
No, it has to be paid. It's as per the mandate. It has to be paid.
Mhm. Yeah, well, now the good news is for you is that by definition of usually, and also by definition of IFRS 15, which is the new IFRS issued recently, anything which is you are charging to the guest for which the guest does not have an liberty to either pay or not to pay and does not also decide how much to pay, then it becomes a part of hotel revenue, and that is why you will see this line as other room revenue, surcharge and service charge. Basically, if so you it for to classify the service charge as income or the room revenue, it has to pass the two conditions. One is that it is mandatory for the guest to pay, and they don't have a liberty to decide how much to pay, right? Whether you are paying it 100% back to the staff, or you are paying, or you're retaining it to the hotel income, it's not deciding point here. So it's only 2 point. One is who decided it, and does the guest has a liberty to pay or not to pay, right? So that's the thing. So you may, if you may want to change, if you are not following, if your management contract or something says that you need to follow usually, then you may have to change the definition or the accounting treatment. Now there are other things. For example, resort fees are which is not a part of the room service charge, because resort fee is charged for the entire resort, not just only the rooms, right? It's charged for using of your facilities, using the beach, using the gardens, everything, right? So, and the cost of that is not going into the rooms division. The cost of it is going into the other operating and distributed departments most of the time. So the resort fee is not part of room income. Resort fee becomes part of your miscellaneous income. So the key thing here is that is whether the guest has a choice or not. So that's the thing, right? So is it clear?
Yes,
Yes,
sir.
sir.
Yeah. So the other room department consideration that you have here is packages. Now, package revenue is again where most of the hotels are different in how they settle, how they record the revenue. So, given an example, if let's say you are putting up a package, so how do you allocate the discount or allocate the package allocations to, let's say, breakfast or the spa or the other treatments? How do you do now? Do you have a fixed price or you calculate that based on the percentage of discount? How do you do it?
In our place, we generally have an allocation like we allocate 84% of the total revenue to accommodation.
Mhm.
We allocate 10% to food, and the rest we allocate it to beverage.
So
So
how is that
in the
decided?
booking, it will show like one line. Sorry, sir, you were saying something.
Yeah, I mean, how is that percentage decided?
It's decided on the cost, like
Okay.
on the allocation cost, how much
Mhm.
breakfast would be costing, how much a lunch would be costing, and how much a dinner would be costing.
Mhm.
Based on the cost and the markup that we add,
Mhm.
we allocate a certain percentage to food, beverage, and accommodation.
Mhm.
So
Mhm.
in the bill, it will show like accommodation charges, but in the breakdown, we'll have three lines coming to the revenue in the back office,
Yeah.
like a split. The revenue
Mhm.
is split into three lines: accommodation, food, and beverage.
Okay. And how about if there's any other spa package element like you are adding spa or golf or anything else?
Depends if there's any package. If the guest wants to have a like a dream rate or all inclusive,
Mhm.
so we'll have a certain allocation going to spa to activities because in our place it's a remote island resort, so we have
Mhm.
activities and other spa included. So we'll
Mhm.
have a certain percentage of revenue going to those revenue goals as well in the back
Mhm.
office.
Mhm. Okay. How about the other hotels, other students? How do you guys are doing?
So the package is already set up in the PMS system, and the allocation will follow the same structure as per the breakup. So if it is a package that is having components for room, breakfast, lunch, dinner, so it's already predefined in the PMS system, and the breakup will follow the same setup.
But how that
Uh, it- uh,
breakup will be decided? That's the question.
oh, the breakup is decided as per the cost.
As per the cost. Okay. Well,
Yes.
in that case, then probably you may want to see this definition of usually. And also the again IFRS is also doing the same. So how it is decided in usually is like this. So let's say you have a package which includes the room, food, and spa. So it's not the cost; it's the market value which you have to see. Means if you are selling this food in the market, is an open price. How much the guest would have to pay if it's not a package? How much the guest would have to pay for spa, right? So the room, spa, food, and spa, or any other package component that you might be looking at. So the total will become to $320, for example. Now you have put it as a ratio, right? And let's say the selling price is 240. So the package allocation would follow the exact the same ratio as it is for the market value. So out of 240, room will get 50%, food will get 35%, and the spa will get 15% based on the ratios of market value. And this is also mandated by the IFRS 15 now. So there is a change. The new IFRS 15 which is issued also follows the same logic. Yeah, you were having some question.
Yes, sir. So, am I understanding correctly? So, what we do is we take standalone price of each component, and
Mhm.
then we take weighted average, and then according to the weighted average, we scale it down to the bundle price, the bundle
Correct.
package price.
That's right. That's right. That's how
Okay,
exactly
got
it has to be done,
you.
not based on the cost. Yes, I understand. Many hotels, I mean, sometimes and even my hotel, like for example, in our hotel we do breakfast for everybody, right? So it's not, we don't sell the breakfast basically. So what we do normally is, we have an allocated cost of breakfast. So say, let's say the breakfast costs about $3, correct? And so we have allocated $6 out of room revenue. So we are giving 50% profitability to the F&B department, because that's their labor cost and everything else. So we costed it out. How much would it be costing for to serve the breakfast if there is a food and labor? So it comes out, let's say, $6. So we allocated $6, irrespective of the market price, because we don't really sell the market in the market. We rarely sell breakfast, because every guest who is coming to our resorts, they have the inclusive of breakfast. But there is another challenge that is now posed by the IFRS 15 is, now IFRS 15 says that it has to be the market value ratio. For example, now we are selling so we have, let's say, a resort, a presidential suite, and also a normal deluxe room, right? One presidential suite, let's say we are selling for $200 a night, and the deluxe room we are selling for $50 a night. But the breakfast allocation from both is the same. It's not changed. Our logic is that because the guest is the same and they are eating the same and they are eating the same buffet, the cost is same for us. But what the IFRS says is two different separate contracts. So if you follow the same market value concept, let's say you put $6 as a break value of food, then the rooms will change, right? For presidential suite, it will become $200. For a deluxe room, it will be $50. So what will be the total? Now is total is 50 and 56 and 206. So the ratio, the weighted average ratio will change. It means the package allocation from the for the rooms and the breakfast will also change, which is now very difficult because no PMS is designed to do it the breakfast allocations in this way. Breakfast allocations are always done on a standard price. So that's the thing that we are taking it as a disclaimer, as a policy in IFRS 15, even though it doesn't follow the IFRS 15, but we are still following it. So usually you have to follow the market price. So for other components, for example, you are saying the hotel in the resort, everything is included in the pool. So there's a full board package. But not everybody is buying a full board, right? So you may have a market value for, or a market price for spa, for food, for lunch, for dinner. So what you have to do is you have to calculate the market value of each total component, take a weighted average, and whatever is your bundle price, you scale it back to your bundle price. So that's where you will get your package allocations. So that's how usually prescribes. Now you follow it or not, that's up to you, right? Any questions on this?
All clear, sir. Thank you.
Okay. Now there is another thing which is specified here, which is called barter. Now I want to understand from you, how are your hotel must be doing barters, right? For travel agents, for brochures, you are giving room for free, correct? In a barter. So how do you calculate the room revenue from the barters? Does anybody has any barter agreements?
So in our place, usually the barters are like free of cost. There's no revenue that we generate for the barter room nights.
And then you are also not recognizing any expense, right?
No, not at all. It's all a comp.
Hmm, hmm,
It's
hmm.
all complimentary.
Okay, okay. What about the other hotels?
So free of charge. It goes under free of charge.
Oh, free of charge. Okay, okay. Well, actually, it is not in compliance with usually again. So bad news. Usually, you have to recognize because the barter, the how it works is usually you have a contract between between your hotel and the agency, right? So where maybe they are doing an agency, maybe they are doing a advertisement on your behalf, or they have printed the brochure, which against which you are giving a room night, and that may not be in the same month, right? So you may be recognizing the revenue in one month, and you may be recognizing the expense in 1 month, means you have actually incurred the expense. Now how the usually says that because it's a different department, the advertisement is a marketing budget, while the room should get their own revenue. So the usually says that you need to recognize the revenue for your barter agreements. So how you are going to do that? Normally you are deciding, right, that you give me a revenue, you give me your service of advertising one page. Let's say it costs $500. So I will give you 3 room nights for free. Correct? That's how it works. So means your revenue from the room nights is $500 for 3 room nights. That's your negotiated. So you will put that into your negotiated because you have negotiated the price. Correct? So you will put that as a negotiated price, or it can be the other. Yeah, it should be other negotiated. So then the travel agent can use that as a service, uh, as a benefit. So whenever they use that room, you will recognize that. If you have, let's say, the expense has been incurred first, means you will recognize your expense and create a liability towards the barter agreement. And whenever you are getting your, whenever, so your liability will continue to stand in your balance sheet in the next month or next to next month, when your when the person has actually used the barter, means those 3 room nights are utilized, because you are recognizing a revenue, means you have a collection to do, right? Then once you have the guest has check out, what you are going to do is you will offset that collection against your payables. So this way the barter will be offsetted, and you will have your expense and you will have your revenue as well. So why this has to be done? Technically, because many places the hotels is being managed by the operators, right? Management companies, and management companies' revenue come from gross revenue and the profit. Even though because you are recognizing the revenue and expense, there is no profit, but there is a revenue, right? So the management fee, the management company will get their revenue based on their management fee based on the barter revenue that you have recognized at whatever values you have done it. So that's one way. Second way is the matching concept. So you have done the when you are servicing the room, you have incurred the expenses in that month. So you need to get the revenue in that particular month, right? And the expenses which are supposed to be done in recognized also in the month where you have actually used it. So the marketing expense also has to be recognized in that same month. So that's the reason why the barter agreements has to be recognized properly. Then in certain countries, the tax authorities are also going to look at your complimentary room. They are going to ask you, okay, because they are supposed to get commercial tax, right? Or you can say a GST or a VAT in many places, or whatever is the name of that tax, value added tax. So they will look at the complimentary rights and ask you, why is it complimentary? Because it means you're not showing a sale, and you are basically evading a tax, correct? So in those cases, the hotel may get caught in the as a evading of tax, because both the parties are evading the tax. Ultimately, you have a commercial agreement where somebody is selling their advising service, and you are selling your rooms services, and both of you has to pay the commercial tax. And by not recording the income and expense, you are evading the taxes on both sides, correct? So
Understood. Yes.
ideally, you have to recognize the revenue, recognize the VAT. Now, when you are utilizing the service, you are entitled to get an input VAT credit, correct? Because you can offset that VAT that you have to pay, that you have paid to the other party. So means you have to exchange official receipts, or you can say official invoices between the two parties whenever the service happen, so that the commercial tax is also offsetted. Then the authorities will have no problems, right? So that's the reason why you have to recognize it. So if you're not following it, I suggest you should start following it, or you can suggest to your financial controllers to create a policy. And also it creates a budgetary constraints on the marketing, because now if you say free, then there is no cost to incur in the marketing, right? So marketing is going to use it as much as they can, even though it's for the benefit of the hotel, it's still a cost. and that cost is not recognized in the profit and loss statement because you are recording the barter revenue as free, right? You're not recording any expense, so their expense versus budget is not matched together. So better to do it. Okay. And then there are other concept, other things which is called the loyalty programs. Now the loyalty programs, when so loyalty programs, how they work basically is, you have a guest who is paying staying many times, right? And you are giving a point. At some points, they will redeem the point. So how that revenue is organized? Are you recording any? Do you have loyalty programs in your hotels?
Yes, sir. We have Marriott
Yes.
Bonvoy
Okay,
rewards.
so when any Marriott guest is redeeming their points, how much revenue do you get, or you
They
don't get?
have a contracted rate.
You
They
have a
have a
contract.
contracted rate for Marriott. Yes, we have a contracted rate for the Bonvoy members. So
Hmm.
we redeem. They give the membership number, and then we redeem those numbers on the
Hmm.
Marsha side,
Hmm.
and then we get the payment from them, from Marriott.
From the Marriott, so you get some revenue from them, right? And you are recognizing that as a room
Yes,
revenue, correct?
exactly. But it's a discounted one. It's not like the rack rate. It's a discounted rate for the Bonvoy members.
Yeah. So means that the so you will recognizing that in your discounted segment, right?
Yes.
Yeah, so that's the right way of doing it. Basically, the every hotel is, even let's say for some hotels it may not be Marriott Bonvoy, Marriott program. They may be doing their own loyalty programs, right? So means they don't have to pay to anyone. They are just recognizing the point and redeeming the point. In that case, also, even though the hotel is not gonna get any payment from anybody, it's just they are redeeming a point. You still have to recognize the revenue from that hotel. No, so normally what happens is, when you are giving the point, you have to recognize the that as an expense because there is a value of the point to or administer the loyalty program. So normally what we do is we credit out, we charge certain, we create a provision for loyalty programs. And we charge the value of points that are being awarded to the guest as marketing fees, right? In your marketing expense, you will see a loyalty program fees. You have to recognize that. Sometimes it's 2% of the 2% of the points or 3% of the points, depending on what. So, what is the Marriott percentage when you award a point? How much you have to pay to Marriott for loyalty program?
We pay almost 7% of our revenue to Marriott monthly.
Yeah, so
We
7%.
pay
So,
4.25.
mhm,
Almost we pay like 4.25 as a franchisee fee every month on
mm,
the gross revenue, and then
mm,
we pay almost 3% on sales and marketing fees
yeah.
every month.
Mm. So that is the loyalty program value. So every point that is generated, it's gonna go into the marketing expenses, right? So
Yes.
even if let's say the loyalty program is managed by the company itself, managed by the hotel itself, you still have people to manage the loyalty program. You have computer software expense, you have other things, you have the redemptions. So for all those, hotels normally calculate how much would be the value. So let's say you put 5% as a value, right? So you will credit out your you will charge to the marketing expense and create a provision whenever somebody redeem the point from there. So it can be 2% of the value points redeemed or 3% of the points redeemed. The room rate will be decided based on how much points you want to redeem. So in that case, the provision will be reduced and it will be back going back to the income side, so that the loyalty program cost is adjusted. So this way it will be recognized as a loyalty program. So even if it's your own loyalty program or it's a third party loyalty program, any point redemption you have to create you have to create a revenue, and any point that you are awarding, it has to be recognized as an expense, right? So that's the another part of the room revenue which you have to decide. Then the wholesaler and OT revenue, which this we have already discussed. I think the internet wholesalers are sometimes the travel agents like Agoda or Expedia. They have a contract, specific contract. In that case, those room nights will go as a wholesale agreement. But if they are selling your direct published rate and there's not a discounted rate, then it will go into the retail. And if they are selling your packages, they are selling your local promotion or a discounted rates, then the revenue will go into the retail segment. Okay. Yeah, so that was all about the rooms revenue part. The another thing that you have to remember is, I don't know if you are recording the allowances separately or you're adjusting it back to the segmentation. How you do now? Are you recognizing allowance separately or adjust directly to the revenue
Yeah, just
So adjust directly to the revenue.
into the
We
segmentations?
don't have a separate segment. Yes. If there is any allowance, we put it back to the same segment.
Same segment, yeah. Well, so the usually requires that allowances are recorded separately. Now, why do you think it should be? What is the benefit of it? First of all, the allowances are the actual allowances are the reduction of revenue due to service problem, not because of the error in posting. If it's an error in posting, you have to go back to your your segmentation and adjust it. It's only the allowance rebates which you are giving because of the service issue. Let's say the aircon did not work overnight, there's a water leak, there's somebody fall down, food was not good. At the time of front office, we usually give freebies, right? We give 10% discount on the room rate, correct? Sometimes we do that. So how you are going to adjust that allowances from which segment? Usually you will say, okay, this guest came from this segment, so we deduct that segmentation, right? So there are two reasons why you should recognize your allowances separately, not adjust into the expenses. One is, if you are tracking it separately, on the face of P&L, everybody would know how many complaints were there by the magnitude of the total allowance, the value of allowance that you have given, right? Because it's face on the face. What compared to the last year, compared to the budget, compared to the previous or the year to date, what is the trend of allowances? Is it increasing or is it decreasing? So one way is it's easy to understand. Is there any problem in the operations? That's one thing. Second thing is, because it's a service problem, not a rate problem. If you adjust into sub-segmentation, it's gonna hit your ADR immediately. So you will, when you are doing a next year budget, how the marketing does the budget, they will look at the revenue production, they will look at the revenue ADR, and they will look at the revenue, right? And next year, when they are setting up the next year budget, they will look at, oh, I did this ADR last month, so my I maybe want to do only 5% more or 10% more, or they will set up the prices based on those ADR. What is the achieved ADR? So prices are never set based on the actual prices, right, of last year. It's always see we always see what is the achieved ADR of that segment, so that we can set up the prices for next year. So if you are adjusting your allowances to the sub-segment or to the segment, what you are doing is you are creating problems, because if let's say in certain months there was a lot of problems, means we had a lot of allowances and you have adjusted into the sub-segments, the rate is going down, the ADR is going down, and next year your budget is going to be impacted by the allowances. You got it?
Yes, sir.
Yes, sir, understood. That's a current problem. Yes.
Yeah. So that's why it usually requires the hotels to recognize the allowances as a separate line item for these reasons, for tracking of problems in the services, and to ensure that the next year, when you are looking at the trends, the data is not distorted, right? So that's the overall about the total room revenue, overall room revenue as per usually, and then you get a total room revenue, all your segments minus the allowances. So that's room revenue. Tomorrow we will discuss about the expenses. So what I want you to do from your point of view is, you look at the expenses. Here is the line of expense. If you get time, I want you to look at these lines. Which of them are you using? And is it the same as you are following? Mean there is a line, there is a definition. So then our discussion will be much easier when we are discussing, and we will be able to devote more time on to discuss what are we going how we are going to record that, and how we analyze those expenses, rather than just only reading the definitions. Is that okay?
Yes, sir.
Okay.
Sure, sir. Yes.
Okay. Okay. Excellent. Okay. So I think that's pretty much for today.
So just one question. Just wanted to
Yes.
ask you something before you
Yes,
go.
please.
The one you mentioned about the service charge,
Yes.
that as per USALI, we need to recognize it as a sort of revenue. And if you are recognizing it as a revenue, you need to pay tax on that.
You are paying tax anyways.
We are paying tax, but we are not paying tax on the service charge portion. We are just paying tax on the gross.
Yeah, but let's say means which tax you are talking about? You are talking about the VAT, right? Without
VAT,
value
yes.
added tax, correct?
Yes, yes.
So let's say the room rate is $100 and you are charging 10% as a service charge, correct?
Mhm.
So the price
Yes.
become 110. And what is the VAT rate?
No, so 100 is inclusive of the service charge. We don't add like 10% on the top. So our
Mhm.
room rate is already inclusive of the service charge and the VAT.
Okay. So let's say it's 100. So how you come back to the revenue then? How much would be the tax? How much would be the service charge? And how much would be the room rate, room revenue?
So for us, it's like 6% service charge and 15% VAT. So we divide 100 divided by 1.21, then we get the net revenue
Mhm.
for the room.
And then after that,
And
you
then
will.
we split it accordingly, like accommodation, food, beverage. If there's any allocation for spa or activities, we credit those separate
So
revenue
how much is
centers with their split.
so what is the service charge? Where is the service charge then?
Service charge is going to the balance sheet account, sir.
Ahmad, this $100 includes service charge, right?
Yeah, $100 inclusive of the service charge and the VAT. So VAT and service charge is going to the balance sheet straight away. The allocation, the
So
split.
how much is service charge? Sorry, VAT, 15%.
VAT is 15, service charge is 6,
VAT
6%.
is so 6%. So that 21% is going
Yes,
to the VAT, right? Or to the balance sheet.
to the balance
So
sheet.
this
Yes.
15% is not calculated on the service charge portion. It's added to the base
No,
revenue.
it's not. Yes, it's not
Okay.
calculating on the 6% service charge.
Okay, understand. Well, in many countries, is part of the VAT is calculated on the service charge portion as well. That's first thing. So,
Uh-huh.
but in any case, it doesn't matter if you are recording it as a revenue or not, actually. Yeah, I didn't, probably you may have to check with the tax consultant. If you show it as a
Mm-hmm.
revenue in your balance, in your profit and loss, you might have to pay the VAT on it. That's true. But in
Right.
many countries, the VAT is paid on top of service charge. So, not for example, let's say the before everything the rate is $100, right? So then there is a 6%, let's say, service charge in many countries. Now here in my country is 10%, so the price
Mm-hmm.
become 110. Now on this 110 you have to
Right.
pay 5% commercial tax, right? So the tax
Okay.
will not
Uh-huh.
be calculated based on 100, it will be based on 110. So you have to
Right.
pay the commercial tax on total in any ways. It doesn't matter you are charging 10% or you're not charging. If you are charged 10% service charge, you have to pay based on 110. So it's not 15%. It's 15.5%.
Right. Right. So you're adding it up on the top. It's not included, it's on the top, which you're
Yes,
calculating.
yes. So in
Okay.
so
Okay.
in Thailand where I worked, in Myanmar, in Philippines, this is how it works.
Mm-hmm.
But in your country, it may be the different way it's working. So to follow, usually you have to check with the tax consultant if you record it as an income, how much if is it going to impact your tax calculations or not. If it is, then it's a management decision whether they want to do it or they don't want to do it, right? But when you are, but it's as a part of the income tax, it's not gonna impact because what normally we do is we recognize this as a revenue into the profit and
Right.
loss account, and because we distribute it together with the salary 100% immediately, so it's part of labor cost.
Mm-hmm.
So when we are tomorrow we are discussing the labor cost, there is a line for service charge distribution. So that will go as a
Right.
service charge distribution also at the same time. So same month we have an income, we have an expense, and it will be offsetted.
So there's nothing to carry forward to the next month. It's all offset in the same month.
That's right.
You're recording it in the same month and you're paying it off. So it's credit against the debit, it gets offset the
Correct.
same month.
Correct. Some, like for
Okay.
example, we are also charging 5% as a part of our provision, right? So we normally
Mhm.
create 5% provision as well at the same time. So we assume we pay 100%. 95% we pay to the staff, 5% we put into the provision. At the end of the year, if we
Right.
see if we have used it or not. If we have used it, is fine. If we have not used it, we normally return to the we put it as income in that year for tax purposes, not for
Okay.
accounting purposes,
Okay.
but just for tax purposes, because we have to pay the tax on that part. Is a part of our income basically. So we disclose this as an
Right.
income, but not as a accounting profit. It will remain as a provision in accounting
Right. Right.
for
It's
year.
only the portion if there's something that has not been paid out. If there's
That's right.
anything that is still in the balance sheet which needs to be paid out, only
Correct.
then on that portion you're raising tax.
That's right. That's right. Because by
Okay.
by IFRS is there it's not a part of your provision, because this is not the provision is normally for future liability, and this is not a liability because you're not supposed to pay it. You are just keeping it for
Right.
any contingency, right? So we had a bit of discussion with our IFRS team that how we are going to decide this. So we decided that if at the end of the year we are not going to use it, we just put it back into our reserve income, in our reserves,
Mhm.
not as a part of our provisions. And we disclose
Right.
this and
Right.
to the income tax
So, sir,
department.
this doesn't go in liability.
No, it doesn't go into that. Basically, it's not a liability because
Which one are we talking about? The service charge or the provision?
the service charge which is kept for damages. For example, like out of the 100% service charge, if we let's say keep 5% as a reserve for potential damages, for recovering any staff exigencies, we pay 95% immediately. We keep 5% for recovering our damages, right? So that 5% is a provision, but technically it's not a liability because you have not incurred any liabilities yet. You are just keeping it in to meet any future damages, right? So that's not technically it's
Mhm.
not a provision. Technically, it's a reserve.
So this
Got
will
you.
have an
And then
impact
it's
on your
released
cash
back.
flow as well then every month.
Sorry,
So this will have an impact on your cash flow as well every month.
that's true. That's right. You were saying something, sir?
Oh, yes. And how about the service charge? The service charge, the moment it lands in revenue, it straight goes under liability.
No, it goes into revenue, and we
Uh,
because we pay together with the salary every month, so we offset.
mhm.
We charge it to the expense as
Oh,
well.
okay. Okay, got you.
So means you have a revenue and you have an expense in the same month. So there is no impact onto the profit and loss account, but it will impact your GOP profitability because you are adding a lot of amount, like 10%. So if your GOP normally is 30%, it will reduce to 27%. So when you are comparing, let's say a hotel which is not doing the same practice, which is recognizing revenue into the liability, the service charge into liabilities and paying out of those liabilities, their revenue will be their DOP percentage will be higher than the hotel which is putting into the revenue and into the expense,
Mhm.
Right.
Noted.
right? Because your GOP percentage now your GOP is the same, right? The profit is the same, but revenue base has increased from 100 to 110, for example. So in this case, your GOP percentage will drop significantly, and that sometimes
Right.
the management companies don't like,
Yes.
or your
I think
GM
even
will
if
not
we
like it.
have like USALI, but I think all the hotels they find their own way of doing certain.
Yeah,
They try
but
to force their own way.
that's the gray area. Every hotel is their own is following their own practices. They are not technically following
Right.
the usually in that aspect. But I'm telling you the standard. Whether
Mhm.
whether the hotel is following it or not, it's a different criteria. But usually sometimes when you have like you have a contract with Marriott, right? So Marriott would be dictating that
Yes.
you have to follow usually as a part of your accounting practice, right? So they may
Mhm.
it can create a part of like dispute, legal dispute later on, because they may say that the GOR definition is not correct. I mean, you are not calculating the right GOR, because the GOR will be higher if you follow the usually, because you are not recognizing the service charge as an income, which is supposed to be by the definition of usually. So it will go in. So it will not. It will increase their GOR. So when you are calculating their franchise fee, when you are calculating their management fee, all of that
So we
is
are
under.
understating revenue.
You are understating
So
your
they might say
revenue.
we are understating revenue and we are paying less franchise fees to them every month. They
That's
might,
right. That's right.
but
But
they usually do audit every 3 months because we need to reveal our revenue to them. We need to load the revenue by second
hmm,
of the corresponding month. So
hmm,
they after every 3 months they do audit
hmm,
from the
hmm,
local tax authorities to confirm if all the revenue has been properly recorded and disclosed as well. So they
hmm.
do that every 3 months.
Yeah, so I will, and maybe sometimes they are not really strict in this, because it's the major part is the business, the to retain the hotel as a franchise, right? So why they would be
Right,
putting too much efforts on this unless there's a big amount and it's impacting a lot, right?
right,
Yeah, so it depends, but they have a choice in their arsenal to say you're not following usually, you are underpaying us. This is the amount you need to pay. In case of future legal disputes, it can happen.
right,
But any company can take a deviation.
Uh, no, deviation means you have to put it into the management contract, or you have to take it in writing that this is how you're doing. For example, like in Somic, they are doing an audit. So the company can always say you did the audit every 3 months and you never say anything. So means we thought that is right to follow, and we are not going to change it now,
exactly,
right? So
right,
of course we have different alibis, so we can do that. But if let's say the contract just say only usually, and they are not also coming to audit or checking into details, so it can create future disputes. Okay,
Okay, understood.
okay, sir.
okay, okay,
All good.
yeah, okay. So see you tomorrow then.
Yes, sir. Yes.
Sorry
Thank
for
you
the
very much.
delay, sir. Sorry to take
No
a bit more
problem.
time,
No problem.
but thank you for all the information.
Okay. So see you tomorrow.
Appreciate the clarity, sir. Thank you
Yeah.
very much.
Okay. Okay. Thank you.
Thank you.
Thank you, sir. See you tomorrow.
Yeah. Bye.
Bye bye.